Happy Sunday, everybody. Welcome to the Trading with Ashley show. I hope you have had a relaxing weekend. I really love Sunday evenings because it gives me a time to prepare for the market. And of course, I'm committed to making videos for all of you to prepare for the coming week. So we are going to be discussing a lot today. We're going to go over the economic events, and then I'm going to give you a potential trade, and I'm going to do it on UNH. UNH got the nod from Warren Buffett, and that is what it needed to get over its slump. We had seen it before it took a big nosedive in the last couple of weeks. It had really hovered right there around the $300 mark. So I am going to be watching it to see if it will hold 300 after this news of the investment from Warren Buffett. And we all like to see what he's doing because we have confidence in our trades and our thesis. But then when you take a legendary investor like that and he adds that your thesis is correct by investing his money in it as well, then it gives you a lot more confidence moving forward. So the trades that I am going to go over with you today, I'm going to offer you a few opportunities with UNH. It's a higher price stock, so some of you may be able to do one of the trades that could offer some really good premium. And then I'm going to have a put credit spread because this stock is now in a bullish mode with all the news, and I am going to help you craft a trade that could be very profitable for you. So those that are in my community in the Buy Right Challenge, a lot of people joined my community just for that, and they are so happy right now because we just calculated week 4 in the Buy Right Challenge. We took $30,000, and with doing primarily buy rights, they are now over $4,500 richer. So that is a 15% return in 4 weeks. And if you annualize that, that's a 60% return a year. And if you look at the S&P, you're having a really good year if you get 20% out of the S&P. On average, it's 8 to about 12%. And so I've been really enjoying seeing all of the individuals in my community talk about how they have been able to get such great returns. And now the biggest problem that my community has is so many of them are enjoying trading so much that they're really wanting to go ahead and retire so that they can do this full time. So if you're in that boat and you're considering retiring full time, how will you know when it's time? The way that I was able to tell for myself was after 6 months of consistent income that I outproduced what I was bringing home in take-home pay. And then when I did retire and I put 100% of my effort into trading, I was able to soar with my returns. And so here are a few of the results that my accounts have seen going back 12 months and looking at the return over a year's worth of work. And so as you can see, we are far outperforming the market, and that's what you want to do because nobody is going to watch your money like you. Now, I know you can turn it over to a hedge fund, and I know that these big box stores, they, promise you that they will outperform the market. But they just can't be as nimble as you can be. And quite frankly, they're not putting their energy behind your money like you would be putting your energy behind your money. So why shave off 1% per year to them when you can do so much better doing it for yourself? And you don't need to be a full-time trader to have great results. You can still do extremely well by just stretching your trading out a little. You could do monthly options. That's what I started with, and it's worked out extremely well. It's very low stress. So I wanted to encourage those of you that are looking for a way out from the grind and you just want a better way of life that is just more comfortable and takes a lot less time to produce the income. I have seen the results with my own children, and it's so refreshing to see how relaxed they are. I'll give you a real live example. So my daughter has now been trading for a living. We're going on the better part of 4 weeks. And she said it's back to school time. And for the first back to school season, she didn't fret about how much it's going to cost for the uniforms or for the school supplies. She was just able to enjoy the fact that we're starting school and buy all the new products that she needs for her children because she sees the income coming in through her trading account. And so sometimes it's the bigger things that make you happy, and sometimes it's just the little things. And that's a little thing that is making a big difference in her life. So best of luck to all of you that are out there trying to figure out how to do this. I'm glad that I can be a part of your journey. Let's go into the computer and let me go over the events for you and the trade that I have for you this week. On Monday, August 18th at 10 o'clock a.m. Eastern, we have the Home Builder Confidence Index. Now, this is important because the index reflects the sentiment among home builders, a key indicator of housing market health. And this is an industry that's very sensitive to interest rates, inflation, and consumer demand. So you want to keep your eyes on all those ETFs that are home builder related, because if it does pull back for any reason, I know I personally am going to be investing more, as I think that this sector will get a lot of attention once we actually have rate cuts. Along those same lines, on Tuesday, August 19th, we have housing starts and we also have building permits. But then moving on to Wednesday, we have something that could affect the market quite a bit. This is on August the 20th, and we will hear the minutes of the Federal Reserve's July FOMC meeting. That is at 2 p.m. Eastern. Now, the reason this is important is these FOMC minutes, they provide insight into the Federal Reserve's thinking of monetary policy, especially interest rate decisions, inflations, and economic outlook. Markets are highly sensitive to signals about future rate cuts or pauses, especially in 2025's uncertain environment with inflation above the Fed's 2% target. And you couple that with the cooling labor market, all eyes will be on this FOMC read. And so if you're going to be trading over Wednesday with Friday expirations, you want to be extra careful and be really conservative in your strike prices. And then on Thursday, August the 21st, 8:30 a.m. Eastern Time, we have initial jobless claims. Now, this is important and it has a moderate to high impact. And then at 8:30 a.m. Eastern, we also have the Philadelphia Fed Manufacturing Survey. At 9:45 a.m., we have the S&P Flash U.S. Services PMI. And then following that, we have the U.S. Manufacturing PMI. And then we wrap up Thursday with the U.S. Leading Economic Indicators. So Thursday's very busy. We'll keep our eyes on Thursday as well. All of this could affect the VIX. So you want to keep your eye, if you're selling options, on spikes in the VIX, because you will get more premium if you're selling options with Spike IV. The first thing we're going to do before we trade UNH is look at the analysis tab and get a sense for the health of the company. Now, this stock has been very beaten up. We know that, and they've had definitely a few rough quarters when it comes to earnings. And so if you look at the revenue or the earnings, you can see that their revenue was growing and they do have earnings. Their earnings have definitely fallen off a bit, but we're hoping that this changes in the coming quarters. And you can see right now the average price target is above where we currently sit at 304. It's 328. So that right there gives you a little bit of confidence knowing that more than likely we are heading higher in the coming months. And then if you look at analyst recommendations, we do have quite a few strong buys, and that's very encouraging as well. Looking at the chart itself, we definitely are over 50 on the RSI looking at the 3-month chart. So that's encouraging. And look at this green volume bar. This is when the news came out about the investments that have been taking place from some very popular investors. And so if you look at this and you want to try to get a sense for where it might run, as far as on the downside, you can see right here, 236 might be the lowest that we're ever going to see on this stock if it can catch some good tailwinds. And then looking at the current height since all of the debacle in the fall, it looks like right here, right at about the 325, maybe 330 area. So if it can break through this right here, then it might form a base right there at around 330 and hopefully head upwards. So you can get a sense for how it might perform. So if I am going to be selling a put and I want to acquire this stock, I'm going to shoot for right under 300. And if I want it to be super conservative, I would go with the middle of the band right here around 365. Now, this stock does require a lot of capital if you're going to be selling puts, so you may not want to go that far out just so that you can have some resolution to your trade sooner rather than later. If you're going to sell puts this week, let's look right here at 822 as the expiration, and let's look at some reasonable options below. I think with the Warren Buffett trade, now if we get below 300, there will be some buyers. And so if you want to look right here at 295, you could get $332 to make this trade. You'd have to put up the $29,500 for the sold put. And look, you can see right here, there's 4,000 in volume, 55 in open interest. Our deltas are good. It's at 0.28. And this is one that if you were to get assigned, you might want to just take assignment versus rolling out, because in time, this stock should double. Now, if we're going to do a put credit spread, if you have a smaller account, I'm going to go out much further. I'm going to go down lower in strike. So let's look right here at 10/17/2025. That gives us a little time for this trade to work out. Now, remember we saw that middle of the Bollinger Band. It was right there at 265. So I think this might be a really good spot to start our trade if we're doing a put credit spread. I like the 260 mark, and the delta's good. It's 0.16. When you're doing a credit spread, you really want to do something below a 0.2. That gives you the best opportunity. So for this trade, I am going to sell this put, and then I'm going to buy a put that has a lower strike price. At this point, I'm going to probably go down 20. So I'll go to 240, and I'm going to buy the 240. So I'll be selling the 260, buying the 240, and let's send this to a ticket and see what it looks like. Now, this trade is going to require a lot less capital because you have both a sold put and a purchased put. And so you look at the distance between the 260 and 240, that's 20, you multiply it by 100. So this trade would require about $2,000 to make the trade. Here's the setup. You use the same expiration date. 260 is the sold put, you do one, and then you've got 240 is the purchase put, and you do one. You buy to open this one. And the difference between them, it's around 270, so 268. On this, I put net credit, and I'm going to put 270, and then you will submit. This is going to give you $270 in premium. And then the reason you don't see 2,000 here is because it's giving you a credit from the 2,000 that's required for the trade. And so if you put this trade on, you may want to do the reverse order for about 50% of the 270 to exit the trade. And then if the trade works against you, you may want to get out of it at 100% loss, meaning you would take the 270, and once this trade that you received 270 for, if it gets to 540, then that would be a 270 loss. That may be the point to exit, and just try to look at a trade a little bit further out and maybe lower down at that point. So just to recap, your exit on this trade would potentially be a 50% profit. What would be when this 270 becomes 135, that would be your exit at 50%. And then if it works against you and this 270 ends up becoming 540, then you would exit, and that would be your loss on the trade. But hopefully this works in our favor. We do have a lot of time for it to work out. And again, if it keeps pushing higher, then this will rapidly end up getting to the 50% mark where you could exit. Remember, if you're with me, Trading with Ashley, there is no trader left behind. Now, I know everyone is waiting for the other shoe to drop in the market. They're very fearful of what's happening, and they think that maybe we may have a correction in the coming months. I prepared a video for that so you know what to do right now before that happens. I think it'll help a lot of you. I'm going to leave that video for you right here.